As a former underwriter of 20 years, I get asked this question all the time. What are you actually looking at when you look at my loan application? Is it just score that makes that decision? Well, I'm glad you asked. Most people do think it's based just solely on their credit score, and that is not the case. Now, grant you, if I open up a credit file and the first thing I see is a credit score in the 400s, more than likely I know right off the bat that's not getting approved. When they're in the 500s, upper and lower 600, now that's a working file. What I try to decide is if that score is going up or down. What's it trending? Where's it going? What's going on behind the numbers? What is the story telling me? I get asked all the time is, what do you mean by story? That's because I'm looking at your debt to income ratio. I'm looking at your DTI. Your credit report tells me a great story as to whether you're living off credit to supplement your income every month or if you're managing your debt. Your DTI is when I take your monthly income gross and take your monthly debts added up. I divide it by that gross income. I come up with a percentage. Typically, mortgage underwriters look at 43% as your cap, where you have to be able to afford the mortgage payment along with your auto loan, your student loans, your credit card minimums, all of that within 43% or lower. Now, when I say your credit report tells me a story, if I see elevated credit card balances, it tells me one of two things. Either you're overspending and living with outside your means, or number two, you're using those credit cards to supplement your monthly income to make those payments because money's tight. Now, if I see a pattern of lates falling within the same amount of time every year, say you always seem to fall behind on your payments in the spring. Are you a seasonal employee? Are you just getting ready to call back to work every year and you're just starting to fall short at that period of time? That's what I'm asking because I want to know what's going on in that particular time frame that you seem to be going past due every time. I'm looking at your score to make sure it matches that DTI and it tells me the same story. Because sometimes I've seen a great credit score, the DTI is way out of sync. I'm not understanding where the difference is or what's going on. And that usually tells me there's some cash-based income behind the scenes that they're not able to prove on paper. We're not able to take for that debt to income ratio. You see how we're looking at more than just score? If you want to get mortgage ready, drop checklist in the comments and I'll get you over my mortgage ready checklist. Don't forget to follow Real Talk Credit so that you can have top-notch credit and be mortgage ready.